First of all, I want to thank Khalid and Paul for keeping an eye on the mentoring room and opening it for trading. And I understand that you guys had some good trading on Friday. Serbi says that she had a good trade with the Aussie CAD. So anyway, I'm very proud of you, and thank you very much, Khalid and Paul, for taking the challenge and stepping up to the plate. I really do appreciate it. Okay. Coming back, as I was telling Brandon a minute ago, I want to share this with you. As I said, I was in Mexico, and I just want to share with you. You guys know that my favorite food is the crab legs. So this is what I had for dinner on Saturday. This is the genuine Alaskan king crab. So anyway, I just wanted to share with you. It looks scary. Yeah, but it is delicious. It was a battle. It was like a battle between me and that. I mean, that's my all-time favorite food. I will discuss it with you tomorrow in the room. Anyway, so it's full of phosphorus and omega, whatever you want to call it. It's fantastic. It just rejuvenates. Okay, let's get started quickly, like we do every week, looking at the dollar. And today, as you can see, today is a holiday, so the market in the United States is a little bit closed. So I'm not really too sure about the move over here, but this was the close on Friday. We had like a sell-off on Friday, and the dollar, it came down to test the 79.19 on the index. And on a weekly base, we are pretty much still stuck between the two structural points, the 80.04 and the 79. But the bias for this is still to the downside. I mean, this is still negative. We had this big turtle soup coming down. We have momentum. We had 4 weeks of momentum coming down. We had like a pause or a correction or a gift. For 2 or 3 days, we tried to come above the 80.04, and we had another failure here. I mean, this is another failure, because we went above it and failed, and we ended the week on Friday on a negative note. So assuming that this is what it is today, this is still, the bias is still to the downside. So I'm looking at this, at the dollar, based on a weekly stage, to be in a slightly negative way. This is your daily chart, and you can see that when I said it came back from below the 79.14, and this was the beginning of a short covering rally or an upside down turtle soup, looking for it to go higher. It did take us to the 80.04, which is again the same range, but as you can see here, we had pretty much 1, 2, 3, 4, 5, 6 days 6 attempts to trade above the 80.04. We were successful, or the market was successful to close above the 80.04 4 separate times. That's 1, 2, 3, 4. And yet, with all these 4 closes in the span of a week, which should have been summarized as a sign of strength, if you will, because it has stayed above it, what resulted for is this sell-off or capitulation that took us all the way down to the 79.19. Now, this low, I mean, is 79.18, 79.19. There isn't really much of a difference. So this is not a failure. I mean, I cannot call this a failure. This is just a test. I mean, it just tested the 79 and it just bounced off a little bit, and so the bias is still down. We're looking for the dollar to still down because, again, this green bar that we have today is still a market is closed, and we really don't have any real direction, so we'll find out tomorrow which way. The other one that we're going to look at is the Australian dollar, because we had pretty much very big moves in the Australian dollar. And if we look at the weekly chart for the Aussie, there is our failure right there at the 105. We sold off. And this week again, I mean, this is a slow, it's a paused day, it's just one day, so the bias is still to the downside unless it trades. I don't know what this 101.54 is. I mean, I'm looking at the weekly chart. I really cannot, I mean, I could see that this was this high, but that's not particularly a significant high, and it was this low here, so I don't see it pretty much as a structural point. So I'll just remove that. So our bias is still to the downside. The low of this wave that actually did put a higher high. I mean, this wave, the high is 37, this high is 104.94, so we did push and make a high. So this is a significant point, it's not a structural point. And this is 1007, and the low of today is 1008. So again, it's just a test. So I'm going to use this as a significant point, and I'm still, my bias for the Aussie is still to the downside. I'm still looking for the Aussie to continue to the downside. And there is a couple of articles that I read this morning about some analysts' negative view to the Australian dollar. I'm going to post them on the blog on our website, so you can go and read them if you wish. So it's by Reuters and other. I'm just going to, but again, this is just kind of a pause. I'm looking for just a pause. So I'm still bearish on the Aussie dollar. The next one is the euro. The euro is still up. All what we have is one down day. We did have some extended moves that I've seen in the euro Aussie and in the euro New Zealand, but in essence the euro is still to the upside. Having just one daily pullback is not, especially on a holiday, after a long holiday, is not a big deal. If you look to the weekly on the euro, still, you were still above the 128.53. It has been holding over here. We had quite a big range last week. Took us from 128 to 130.80. So the last week big range was 250 pips up. So having a pause is not a big deal. The high is 130.80. Right now we're 129.80. So we just probably 100 pips from the high. It's not particularly a big deal. So we're kind of neutral on the euro. The next one is the British pound, and this is by far the weakest currency. I mean, this currency has unfortunately no leg to stand on. It's been oscillating in this narrowing contracting triangle, and then right here we have a pretty ominous or a pretty negative setup. First, it did break. This was a structural point. I mean, the 162.63 should be a trend changing point. I mean, that a trade above and a close above the 162.63 should have been a trend changing setup for the pound, and we should have seen an explosive move to the upside. Now, having a failure to do so, specifically after we did actually break above it pretty much for 2 consecutive weeks, and to begin to sell off. So there you have a turtle soup plus a failure of a structural failure to the upside, because as I said, this is your structural failure right there. This is the column that is holding the price, and having to come down and to trade above it and fail, that is, you have 2 major sell signals. So this is by far the weakest currency that I have as of yet. So let's just put them on the so for the euro dollar, for the US dollar, this week I'm going to be negative on it. So negative on the US dollar. We are also negative on the Aussie dollar. We are also, I would say, neutral on the euro. And we're quite negative on the British pound. Okay, let's go and see the rest of them. Let's look at the Swiss franc. As we have been discussing, the Swiss franc and the euro have been moving very much in tandem with each other, and what you have right there is a classic setup. We did trade above the 107.68. We had like a minor structure point last week on Friday. We closed the week at 107.71, which is pretty much at that structural point. And all what we have today is just this kind of pullback, which is pretty much still inside the previous week. If you put it on a daily chart, we had this kind of a sell-off as a pushback from the 107.68. It is a sell. I mean, this is, but we are about 50% off the low of the day. I mean, the low was 106.98, so we're about 40 pips off the low of the day, and the previous daily low is 107.38. We are now at 107.29, so we are about 10 ticks from having a buy signal on the Swiss. So let's see the euro, if we have something there. Now the buy signal on the euro would be 130, so the signal on the euro index would be about 20 pips away, so it's closer for the Swiss. So the Swiss, again, we're going to deal with it as the euro. We're going to be neutral to neutral basically on the Swiss franc. The next one is going to be the Canadian, and this is a pretty good, strong currency. It is the upside down of the Australian dollar. So far it is right above the 101.55. It is pushing higher, it is holding above the structure point. So the Canadian is definitely one of the strong currencies. If I put the weekly chart for it, as you can see there, it is pretty strong. So the Canadian is one of the currencies we're looking to buy. So instead of being neutral to negative, so the Canadian would be a buy on the CAD. Last but not least is the Japanese yen. And as you can see, it is doing what it's been doing for the last, since May of this year. It's been oscillating in this narrow range, and it is beginning to do something like what the pound has been doing. It's beginning to give us this kind of pattern, if you will, and that is the coiling pattern that you've seen it, something like it in the British pound, but the one in the British pound has been doing this for the last, from 2009, close to 3 years. This, it has been doing this since August, since May of this year, so it's kind of oscillating. So we can expect a push up, at least to test the upper end, which is the 128.61, and this is what has been making higher lows on the way up, and it's been making some higher highs, but it has been unable to hold. So I'm just taking the general bias. This is not an exact triangle, but just a general bias to see that at least our closing are creating a negative contracting triangle, and it should be able to break out in one way or the other, either to the upside or to the downside. But until then, we will try to buy it whenever it comes down to the lower end of the range, and we'll try to take profits or somewhere when it gets to the upper side of the range. This is our daily chart. There is your 127, here is your 128.61, and again you got two daily lows, and then it just turns around above the structure. So it is a currency now that you're looking at it in a non-directional kind of a trend. It is a strong currency, that's agreed, but it is in a sideways pattern. So therefore you're looking to be a buyer anywhere near the support, and you're looking to be a seller anywhere near the resistance. But the one key thing that we do here in our group, which is different than anybody, is that we don't anticipate the support and anticipate the resistance. We take the failures at the support, so this is when we buy the support, and we take the failure to trade above the resistance, and that is when we go short. So if it's going to push higher, and if we're going to buy the Japanese yen, I want it to go all the way up to the 128.61. I want it to go above the 128.61, and then I want it to fade. So if you see here, it did come to the 128.61, and then it pushed to the 129.12, and then it faded. So the second time you can take it short, it will take you very nicely to the 127.37, and then you see a fade broke, and then when it comes above it, you want to buy it, and we can play this oscillation. So we have probably another 50-60 pip to the upside in the Japanese yen. So we will be looking at buying the yen, but we're going to be buying it in a neutral way. So it's going to be plus minus the JPY. The last one I want to look at, but I don't have the index for it, we can look at the dollar New Zealand, because we have been trading the New Zealand lately. So I'm just going to use the dollar New Zealand. As a, you can see here that the New Zealand is actually much more stronger than the Australian dollar, and we have here quite an interesting setup right there. It closed the week at 82.08. We do have a structural point or a significant point at the 81.82. We did break below it, and we should have had some serious capitulation. I was looking really for capitulation. Now, since we did not capitulate, and it's now sitting at 82.08, which is a failure to break below the structure, and it is a close above the structure, so we should be looking at the New Zealand to go higher. So we'll be looking at buying the New Zealand, and if it comes below the 81.82, then that will be our selling point. So we're going to add the New Zealand into the mix for the first time, and in this case we're going to be positive for the New Zealand USD. So the way we're going to do the pairing, we're going to be looking at the dollar New Zealand. So we're going to do the dollar New Zealand, that will be one. The next one we can do short the dollar CAD. We can be slightly neutral on the dollar Swiss. Probably the dollar Swiss would be sitting around maybe the structure point, the 93.39, probably somewhere around there, but the bias is still to the downside. We should be looking at the shorting the Australian dollar. We should be looking at the Aussie New Zealand yen. We should be looking at the pound yen. Should be a mess. The pound yen should be a capitulation, really selling off. The euro yen should be also selling off. The Aussie yen, we need to take a look at it, but we can be looking at buying the CAD yen. We can be looking at buying the New Zealand yen. So in essence, we are looking at, we are also looking at shorting the pound dollar. That is one. We might look at shorting the pound New Zealand. We definitely can look at the pound CAD, short the pound CAD. That should actually be a very good one. The pound CAD should be moving nicely. And we also, the Aussie CAD will also be brilliantly looking at again. So we can, again, to wrap it up, we're looking at, let's say, short the pound CAD, short the Aussie CAD, short the pound Swiss, looking at the shorting the euro yen, shorting the Aussie yen, shorting the pound yen, we may be looking at buying the CAD yen. We will see that in a second. We're looking to short the CAD, the dollar CAD, and we're looking to buy the dollar New Zealand. We can also look at shorting the pound Swiss, okay, and also the Aussie Swiss. All right, so with that, let me save the recording.